TGIF Warriors. Hiya, Brock, Kevin, Jeff. Everyone doing okay? EG's trying. Good morning, money. Money comes and goes. Time is gone forever. Make it count, money. How you doing, Hugo? Okay, so we do have a 2-week reversal in Euro Pound. Count back 2 candles. We need by the end of the session to close over 90.57. Hi, Hanye. I'm looking at this dollar. A decent week. But you know, if this is a neckline here, maybe we get a right shoulder, or maybe we get one more washout. Because, even though I, got this move in the dollar and went with it by shorting cable, you see this down here? That bothers me. It bothered me, but I did it anyway, this right here. So it was at the 93 lows. Hello, Tripal. What kind of low is that? Face Warriors. What kind of low is that? Is there divergence there? Yeah, you got it, Amira. So it's a confirmed low. So, I mean, this bothered me. Maybe this is just another ABC, and we're going to wash one more time. And that's what I think we would need. One more high, you mean, Jeff? Jess. Yeah. So that's what I'm thinking. And you know why? I really don't like to fade. Yeah. I don't like to fade this guy. You ever hear of him? Oh, let me move you guys over. I really don't like to fade any of the team. But, Greg came in and talked about it, and he's more than talk. So he's long the S&P. He's looking for 3,600. What a coincidence to what you guys are thinking here today. And I think that would take a new low in the dollar to generate it. What do you guys think? And if that happens, then there's going to be a better area to sell gold. Maybe over this high, 1945 or so. We'll see. Silver, I still think will be the preferred short. See how much weaker it is. Gold's much closer and firmer. And, that's because I still think the gold silver ratio, although it's pulling back a little bit here, kind of looks like we still have a move here to the upside, which will make gold the preferred long. Gold outperforms. And thought Bitcoin could come under pressure. I don't know what to do with the charts. There's one thing I could say about Bitcoin for all you crypto people. Look at this weekly. What kind of formation is it? And then I'm going to bring Blake in. Tell me what it is. Here, I'll give you a hint. Call it a flat top and then call it this. Almost looks like a channel, but the point I'm trying to make is it looks like an ascending triangle here. If I went more with like the moving average here, can you see that? Okay. So, I mean, you break out over this level right here, this pivot, call it 13,000, and this is 3. You're talking about a $10,000 move over this. So, maybe we pull back one more time to 88.60 if we get this risk off after one more high in the S&P. But it's been acting, I think, more like S&Ps and silver. L, in my opinion. So, I think it's held up better than silver had. Didn't perform as well as silver. I think it's more like correlated to just risk in general. And I just wanted to look at one more thing. I think it was copper. Amazon isn't putting in such a good week. Either is Google. Either is Microsoft. They're not great weeks. So how about this? We got a new high in S&Ps. We take out 35.50. And we don't get a new high in NAS. I don't know. It's far-fetched. Okay. I'm burned out. It's Friday. How are you? How are you, Blake?
Hey, good morning, Dale. I am feeling pretty much the same. And you were talking about the euro pound, euro sterling earlier.
Yeah.
Brexit headlines were hitting the wires, and it's like I didn't sleep too well, and then to get up first thing in the morning, and then just you're like sideswiped by all these Brexit headlines. It's crazy. Excuse my yawning. Like I said, I didn't sleep too well, so you have to bear with me. Let's talk a little bit about some of the headlines that came out. So you can see all of these headlines here. Johnson says EU not willing to offer UK same terms as Canada. Before that, he says that getting ready for Australia-style Brexit deal. And if you don't understand what the Australia-style Brexit deal is, it's basically his way of saying that no deal. So that's what he's basically saying. And so what we saw in the cable, first and foremost, was when that headline came out, you can see the sterling it fell, right? We've since recovered because the EU, the negotiations are still ongoing. So even though Johnson says, get ready for a no deal Brexit, basically, it doesn't mean negotiations are over. The two sides are still negotiating next week. So because of that, we just have to we have to wait. It's just another negotiating tactic, I'm sure. But for now, we're still seeing us flop around and flail around is probably the way I should say it, inside of this wedge in the euro sterling. I had an order last night and I pulled it, which obviously whenever I do this kind of stuff, I always go in retrospect because you don't know what's going to happen overnight. And I actually had an order to sell the euro sterling at 91. Obviously if I would have just left it in and got up right now, I'd be, oh, wow, great. But it depends what time I would have woken up and seen the order, because with all the news that were flying around, I probably would have just got out for a flat, small loss, small gain. But the bottom line is you can see we're in this wedge and we're knocking our head up against the wedge.
Nice look.
Well, yeah, I mean, it's just real sloppy. So the way you have to look at this right at this very moment is you have to say, okay, here's that's the last known high. This is the high that was just created this morning, right?
Right.
That's the last known high. As long as we're not above 91, that's basically 91.25. As long as we're not above that, the risk is still down, but at the same time, while we're above 90, you can't be bearish. So, because this is what we call a bearish wedge. A bearish wedge is when you have consistent lows, lower highs. Propensity is to break lower. Doesn't mean it has to. It's just that would be the natural tendency of this chart pattern would be a break lower. That means there's a higher risk of a move lower. But you can't really get bearish while we're above 90 pence, and you don't want to get bullish and turn. Sorry guys.
Blake, that could have been a false breakdown before we rallied. That there.
It can be, but remember this, Dale, this is all headline driven. It has nothing to do with technicals at this point.
Oh, okay.
Right. I mean, you can't, if it was just a normal chart pattern, I would say false breakdown, I'm getting long.
Yeah.
But this is
everything's tape bombs. It's the kind of environment we're in.
It is. So you have to say, okay, obviously there are sellers here that continue to cap the euro sterling, which, in essence, basically the market telling you, hey, we're positioned for a favorable outcome.
Well, I was just trying to force it up to 92 so Stell could get his shorts off. Okay, I'm just trying to make the guy happy.
Yeah,
I use the cursor technique for a breakout, Stell. It didn't happen.
Yeah, there you go. But I guess the thing I want to point out is, these are headlines, and and headlines are moving this market, and it's moving it aggressively, and you just have to be really careful, not getting turned around. Because when that news was coming out, I was like, oh crap, we're going to break out. And I bought a little bit of euro sterling down here. And then I sold it out around the same price. And I'm just like, you know what? I need some concrete evidence. And right now, because I know we're going back to the negotiating table next week, why can't the sterling, rally a little bit on the, hey, there's still a chance that a deal is going to get done. Why don't we slip through here? Also, I just want to say that Citi was, wait, hold on. They were long. Let me make sure of that. They were exiting our euro pound short trade. So they were short. They took a loss. And so, maybe now that that big broker got out of the way, it's ready to go down again. So you never know, right?
Yeah.
You never know. But there are, like I said, there's a lot of headlines. There are a lot of headlines this morning, and that's what's really driving the euro sterling. And it is quite messy. And while we're in this, range, it's probably going to continue to stay messy. I would assume above 120 or above 91 and a quarter, or below 90 cents or pence. I say cents, it's pence, is going to really tell us, where we're going and why. And I'd hate to try to make the assumption I know what's going to happen, because I don't. I mean, I don't know what's on the mind of, Boris Johnson, what he's got planned. And, it's kind of like trying to figure out what these, the stimulus, the chess game that's going on between Pelosi, Mnuchin, and McConnell. Oh my gosh, the what just happened?
Done.
What just happened there? The headline must have just hit.
Yeah, he has a press conference.
Let's see. UK hasn't agreed to talks. Oh, the UK has not agreed to talks with the EU next week. That might do it. Uh-oh.
And Joe Perry, I don't want Stell to take his shorts off, LOL. I want him to be able to put his shorts on. So come out of the closet, Joe.
All right.
Well, don't you think it's time?
That actually is a little bit of a headline, because if for some reason UK
they're fading that again
talks,
too. Yeah.
If they break off talks, then what's going to happen is you will see the pound weaken. So just a little heads up there.
More
Okay.
than more than that, Blake, do you believe in this? Don't try and make your week on a Friday.
Yeah, right.
Or
Yes.
do you feel that you kind of follow that? You're
Oh
kind
yeah,
of
of
book
course.
squaring and just kind of getting ready for next week on
Yeah.
Friday,
Yep. Absolutely. Hey
unless
guys, we
there's
have
an end of
retail.
peak.
We have retail sales coming out in about 15-20 minutes, or about 15 minutes. So let's I'm going to get some of this analysis done really quick. But let's so here we go with the euro. The euro is pushing like I think a minor trend line here. Oh shoot, I did not mean to move that. I hate it when I do that. Accidentally move the fib levels. But look, you can see right here from we were looking at this this ascending wedge. Basically, the 618 retracement and also the 618 retracement. Also, the 127% extension came in at basically 116.95, and we were talking about how important that support would be yesterday, if you guys don't recall. So we basically held it, and so now we're rallying back, and we're finding probably some resistance. That resistance here. Well, I guess we could probably do this. About 117.50, I'd say roughly, is going to be some resistance. So let's go ahead and write that down. And then support is that confluence, but I'm going to probably write 116.90. Let's double check that number really quick. 116.88. So yeah, 116.90 really is support. Okay. Cable. Okay, so we're all over the place here, and I think the way we have to look at the sterling at this point, something like this. It's a mess. I know, right? It is. What do you do with it? Probably nothing at this point. Resistance 130.35, support 128.60. I mean, I hate to write that. So, it's a disaster. I mean, if you're trying to make sense out of this sterling move right now, good luck. 128.60 is support. That is for sure. Oops. Resistance, I'm just going to write out whatever the spike high is here, 129.62. Hold on. So there's some comments coming right now, so just a little heads up. 129.60. Did I say 129.60? Yeah. 129.60. Aussie. So really key resistance now in the Australian dollar comes in at 71 cents. Because if we can break above that, then we should make a move. Or 71.20. Maybe 71.50 would be next after that. Support is going to be the overnight lows, or actually there's a confluence here. This is 127% extension of this move. Crap. Hold on really quick. So pound starting to move here. Not too sure why. There's EU Council President is briefing right now, so that's probably what's moving the market at the moment. Okay. So what I'm gonna do right now is I'm gonna set a couple alarms here so I can go pay attention to other stuff. Really quick. Okay. So Aussie, we were just talking about the Aussie. And by the way, I still believe, well, actually, because we made this dip down here to towards 70 cents, we were bearish the last couple of days, and we made this dip back down towards 70.50, and we held. While we're above 70 cents, we have to just go back to range now. So yesterday's support of 70.50, the overnight support, is going to be important. You notice how we're really range bound with almost everything now. Kiwi, I know we have this like head and shoulder possibly developing, but for today, 65.70. Resistance. Will be, I mean, I'll write down 66.80, but I'm going to do 66.30 first. Okay. Dollar Canadian. So the dollar Canadian rejected pretty much where it should. We surpassed the 30% retrace, 38% retracement. We actually hit the 50% retracement. And also, this big support resistance zone, you can see that. So that means that now 132.40 is going to be resistance. Support will be right back down here, this little breakout area of that inverted head and shoulder pattern. So that comes in at 131.50. Dollar Mexican peso, it traded heavy yesterday. It continues to trade heavy today. If we get a stimulus package and the equity markets really move here. Wow. By the way, the euro is getting really close to that resistance. The US dollar Mexican peso is at risk of actually breaking lower here, in my opinion, because if you looked at the price action yesterday, it traded really heavy, even with stocks, trading lower. We had actually a Gravestone Doji yesterday, or Gravestone Doji yesterday, which obviously is playing out to the downside today. I'm going to be laser focused on this move down to 2080, because if we break 2080 or 2081, really, that's going to turn this dollar Mexican peso from range bound to bearish if we break through here. And I think that is increasingly becoming a risk, because of just, again, you have to watch the price action. It's trading really heavy. 21.50 is resistance intraday. Here's a Swissy. So if you remember the dollar Swiss from yesterday, resistance, the underside of this trend line, I think we wrote down 91.60 and then 92 cents. So today we'll just write down 91.60 as resistance. Support. I'm gonna actually, we're on it right now. I'll write down 91.10 and then 90.85. Okay. US dollar, Norwegian krona. Really having a problem with this 940 level. Support will be back down here at 920, but we really should, well, for today, it'll be 920 again. And because we had such a hard rejection of the 940 level, I'm going to write down 940. Whoops, that's not what I'm going to do. Okay. And we're range bound there. Dollar yen. So this trend line that comes through here comes in now at 106. So that's what makes 106.10 or 106.13, whatever you want to write down. I'll put 106.10. Very important resistance. Support is at 105. I know we, dipped to 104.95 here and 105.05 here. That's why I just write 105. It's really key support, and we are range bound. Let's go into the dollar index. Here's the dollar index, and hold on really quick. I'm just seeing if there's any headlines. I keep looking up to see if there's headlines coming through for the for like these Brexit negotiations, and if there's going to be a meeting next week. That's what I'm kind of looking out for right now. Dollar index, resistance in the dollar index. I mean, I think it's same as yesterday, right? 94, but we could probably look at the top of the resistance zone. We were right there. So I'll write down 93.90 and 93.25. Okay. And Dale, isn't it? It sucks because everything is range bound, right?
Yeah.
I hate it when the market's like this.
It's like all this compression is building up for what.
Yep. Well, for something. And I was reading this analysis piece from one of the big banks that is talking about, NASDAQ, pushing 30 or pushing 12,000, then 18,000 next after that, and it's just like I mean, I hear arguments both directions.
Yeah.
And you have to imagine we have a huge stimulus package that's gonna be working its way through the economy. Will it really stimulate growth? It could,
Yeah. It will. It will. They're going to, no matter who wins. It won't.
It won't stimulate growth. It will dampen the a possible huge hit in growth. That's a totally different thing.
Okay. So, even if it's on infrastructure, spend like 3 trillion on rebuilding everything, grids, everything.
Hey,
yeah.
Hey, Steve, before
we have numbers,
start,
numbers.
Start down
retail sales
of what's going to happen here. Just
retail sales.
We're going to let data interrupt an argument between me and Steve. I can't believe it.
Oh my God.
Oh gosh.
That should never happen.
I can't adjust.
Especially one that you're winning, Dale.
Thank
you, brother.
All right. Okay. I just have on the dollar index, since we're sideways anyway, it's we're expecting a core retail sales to come in a little weaker. So
good prints.
Wow.
Good prints, bad revisions.
I bought underwear.
Wow. My goodness. Dollar index could care less. Interesting. I guess everybody is saying, yeah, that's great and all. Give us another stimulus package. I think that's what the market's saying it to us right now.
Yeah, it is.
Yeah. So
The
okay,
market's saying what Paul is saying, you know.
let me finish up here with gold really quick.
He loves only gold.
I mean, look at gold
Gold.
tightening in the
Yeah.
triangle here.
It's gonna pop, isn't it, Blake?
At some point, and it's probably not going to be today.
Yeah.
1890 is support.
I love those old Bond movies, don't you, Dale?
Oh yeah,
I think they're amazing.
he was my
19 and a quarter.
hero. And
Roger-
Warren Beatty
Roger-
and shampoo was pretty
Roger
good.
Moore was my favorite.
Yeah.
Sean Connery for me.
Yeah. Nice cars, huh? You the Bentley.
Ah,
I have to
No.
agree with Steve on the Sean Connery, but you know, but we all
British
have our
cars.
right?
British cars.
All right.
Well, I'll tell you, that's the quickest amount of money I ever lost on a car was buying a British car brand new.
There you go.
Selling it 2
Oh,
years
brand
later.
new. Yeah, you
What
don't.
did you
There
buy?
you
A
go.
Jaguar?
No, no, as a Land Rover,
Bentley?
but
Oh, Land Rover.
that was a I don't know, 15 year ago. My wife wanted the newest, latest, greatest,
Yeah.
and there was nothing I could really do to fight it. You
Yeah.
guys that are
Happy
married,
happy wife, happy life.
yeah, and so
Happy
Yeah.
wife, empty pocket.
Yeah. Ironically, after that happened, I knew what was going to happen. She learned her lesson, and
Yeah.
that'll never happen again.
You paid for her to learn the lesson.
You know,
Anyway,
they have a new Hummer out and it's an EV. I saw a commercial. Looks pretty cool.
that I have not seen.
Yeah.
But hey, guys, there's
All
your
right.
unfortunate bias chart, and I hate it. I mean, it's all range, and
It
that's
should be called the no bias chart.
yeah, exactly. And but look, it will change, and probably it will change beginning of November. So
Well, you
I-
know what, Blake, if you have time, you know your favorites on today. Mark, I made sure that his stuff's gonna work today. And he has
yeah.
Mark Newton, and he's getting involved with the Foundation of Cycles. He's got some real interesting things to share with us today at the
You
top
know what?
of the hour.
And as I tweeted yesterday, Mark Newton is one of my favorite technicians around. So you guys stick around for a great interview today with Dale. Obviously, it's the pain you have to go through listening to Stelios for the next 30 minutes. But fortunately, you
Yeah.
have Steve to pick up where
Yeah.
Stelios lacks. So
yes, indeed. I couldn't agree more.
no.
Yeah,
Anyway,
yeah.
you guys enjoy your Friday. Good luck today. Remember,
You do,
trade
mate.
trade carefully. It's nasty. out there.
Treacherous. Yeah.
It is treacherous on a Friday. All right,
Yeah.
guys. Talk to you soon.
All right. Have a good weekend, Blake.
Bye bye,
too.
mate.
Bye.
Thank you, Blake.
You guys.
Hey, Friday.
Hey, Dale.
Yeah. Thank
Yeah.
God I found Forex Analytics.
Yep. Thank God you did.
So,
Yeah.
so a couple of things to talk about. First of all, Blake mentioned the UK. I'm just so tired of this, and I cannot imagine what it's like for actual UK people. But Johnson, I think the way he's dealing with this is basically, we were talking about this in chat room with Amanda, and she very correctly said that Johnson basically putting the ball on the EU side and saying, look, we have been a member of the EU for decades, and you won't even offer us Canada terms, which is, it doesn't sound good anyway. So it puts the ball in their court. I think he's due to have a conference in a couple of hours' time, so a press conference. So we'll see if he announces something. But I think this is just another play of, game of chicken. And, I stand by what I've been saying, that I think they will either extend it again or do something, but they're not. I think they're going to avoid a hard Brexit, especially
Hopefully
in
not
these
extended. I
times.
can't handle any more
Yeah,
of
I
this
know, I
drama.
know,
I
I
just
know.
want it to be over.
Yeah, so let's see what happens in 2.5 hours. I think is the press conference for Johnson. Otherwise, we had numbers didn't really have that much today. CPI in the eurozone minus 0.3% again, so way below 2%. And there was one of the EU officials today saying, "Look, this really accommodative policy is appropriate, and I don't think they're going to deviate from this for a long time." And that was data-wise. Now, an interesting thing that I was discussing with a friend of mine, and I think that's a very interesting thing to keep in mind, is yesterday we had PPI numbers out of the US, and if you remember, they beat quite a bit.
Mhm.
And the question has been for years now: where is inflation? Where is inflation? Obviously, number one is how do they calculate inflation? That's one story. But even with the way they calculate it now, we will see an effect eventually as they throw all this money in now, because it's the way they're doing things, the way the stimulus is going now is different to what it was back in 2008, 2009. The coronavirus bill, and the way they've been throwing helicopter money, and basically it's not just buying assets, it's not just buying government bonds, they're doing other things, and this slowly is going to creep into the economy. And the interesting point, which I was discussing, is that the Fed themselves have said that the most accurate, or let's say good predictor for future inflation is food prices. That's what they look at. They don't look at other components. They look at food prices. That's the best thing to look at, because it usually leads everything else. And guess what? Food prices yesterday was up 1.5%, something like that. It was basically the big outlier which pushed everything higher. So just something to keep in mind, that eventually we will see inflation. After all, they're throwing all this money in the system, and it has to come through at some point. But obviously timing it is the real issue. But just something that I was discussing today, I thought it was interesting to share with you guys.
I like it.
Yeah, and
We're already in it still. Maybe it's just, not really recognizable. I mean, I think a lot of people, this inflation pop we're going to get, I mean, it's showing up in copper, it's showing up in grains now. A lot of funds are moving into grains. You're talking food. So, it's already underway. And if the dollar's peaking, all this stuff. So,
and you're seeing even items which are traditionally deflationary, like electronics and stuff like that. You saw Apple, they announced a new iPhone, which I think the base model is now $150 more expensive than the previous one. And it comes without a charger, without headphones, without anything. So
soon enough, without a phone.
This is
it's going to be an empty box saying iPhone.
Yeah, I mean, granted, everybody has like 10 chargers at home now, because they're the same for everything. But still, this is stealth inflation. But or you see packaging of crisps, or whatever you call them, and there's stuff you buy in the supermarket, same price, but they reduce the amount. So you don't see inflation in the price, but it's inflation in less product for the price.
I'm paying more for a haircut. Even services are going up because of this.
People
are justifying raising their prices because maybe they have to travel to do it and things like that. Yeah.
And let's not get started on healthcare and education and all that. That's
okay.
double digit inflation.
Okay.
Anyway.
All right.
Shrinkflation. There you go. Thank you. Ride the curve. Yeah, shrinkflation is what I described before with the products. Anyway, so that's pretty much it. And I wish everybody a lovely weekend.
You too,
Same to
buddy.
you, mate.
Yeah.
Same to you.
Enjoy.
Thanks, guys.
So, Dave.
It's you and me, man. So you need some questions from the start at the beginning?
Yeah, I could use them, but we have a few things to talk about before coming to that.
Okay.
I'll start very briefly with just a couple of notes on the side of the effects, and then I'm going to jump to the rest of the assets. as always, as almost always, starting with the DXY. Look at the DXY.
Oh, perfect. I wondered why it stopped there.
Yeah, it got rejected from this horizontal resistance area, still below the broken channel trend line support. So no real reason to change a bias here for obvious reasons. I mean, I don't need to really explain. Look at where cable stopped at the bottom of this channel. So it looks like it might want to move lower, but we need a break through this channel for in order for that to to actually start playing out. And another one I wanted to talk about the other day is USD NOK. If you remember, I said about the USD NOK that it looks like it wants to produce one more leg higher. We've now broken through this more or less clearly corrective move lower, at least as it looks for now. So I do think that we might see one more leg of upside before we see a continuation lower. I do think that it's an opportunity selling USD NOK if we get higher levels. Now, speaking of which, we did get 2 days of depreciation, and a third was looking like it was in the cards yesterday, having to do with the S&P. But look at how we ended up closing the day. Not only way off the lows, but almost unchanged. And we found actually support here at this ascending channel. So I'll warn once again that this is a game that's probably extremely risky playing, meaning wanting to bet that during the next 2.5 weeks, you want to be going against the Fed and the government. So, that's my advice here. Here's the NASDAQ, more or less looks the same. I do think that there is a very decent chance that we're going to have elections at and if not at near all-time highs. So keep that in mind.
One thing to note is on the last high that we're now challenging in both of those indices, the highs were confirmed. At new highs here, we will not confirm.
Probably we won't, yes. And if you remember, I've said that I think that after the elections is probably a much likelier period to see.
I thought it was too pat, but it's probably not. So anyway, Mark's gonna stick. Mark actually, he's looking for some type of peak, and I think he said a new high first. So
yeah, I agree with Mark. I also think that we're going to get one high, at least one more high first.
Yeah, but then he's pretty negative. So stick around for his cycle work there, Volgi.
I'm also quite negative. I've explained the reasons in the past. I do think that once the elections are over, and perhaps following a small rally, cheering up for the winner of the elections, which of course Wall Street is trying to persuade us that no matter what, the election result is going to be positive for the markets. Which,
like everything else.
Yeah, which if you ask me, it makes no sense. Actually, I take that back. It totally makes sense in the sense that they want to always give people a reason to be bullish and be clients and be buying stocks, right? Yeah. But how the hell can a Trump re-election be positive until it starts showing that Trump getting re-elected is, if not a long shot, it's at least, let's say 50-50. And now suddenly Biden winning is also a risk positive. I mean, you go figure out. Now, fundamentally speaking, and they've explained that multiple times before, Biden winning should be, in comparison to Trump winning, stock negative. And the reason is extremely simple. Biden has not only pledged to reverse the tax cuts that Trump put in place, but also increase taxation even further. Now, for people that know basic economic theory and financial theory, stock prices, in essence, what are stock prices? They are a discounted price of future incomes for these companies, right? Post-tax, of course. So I mean, extremely simple maths. If you are to increase taxes, the current value of stocks should readjust based on that, right? So
Yeah.
purely based on that, stock prices should move lower. But we all know that what mostly drives the market, which is completely unhealthy, is stimulus and stimulus expectations, right? So given that, I can see the argument that under Biden, they expect even more
Right.
monetary madness. So that's the only basically bullish argument I can see, in favor to that theory that, Biden winning might be like really positive for stocks or whatever. But at some point, there is an end to this, meaning we know that there are diminishing returns to that. Just think about how small in comparison QE1 was, right? And its effect. And now consider that we've got to the part that we've only started counting by the trillions.
Yeah.
So at some point, the amount of stimulus needed to keep pushing forward is going to be that great that the that the market jitters about increasing the debt so much probably is going to end up counteracting the benefit of the stimulus altogether. And with the pace and the trajectory these things are moving forward during the past, let's say, 7-8 months, I think we might be, closer rather than further away. At
I
least
was kind
closer
of
than
thinking if we don't have a clear result, and that it's going to be challenged by the president, especially if it shows he's not winning. Okay, that it may take a month for it to clear up, and during that time frame, they can't pass the stimulus.
Exactly. That's
package.
what I wanted to say. The only
Okay. Yeah.
only reason why the stock market is going to care about it is because as long as the situation is as you explain,
Yeah.
there is obviously no stimulus coming through, right?
Right. Right. And
So
then once that
yeah,
clears up, that's a low. Maybe we have a 10-15% correction in the interim between then and now after a new high. That's my thinking.
yes, exactly. Until one day somebody challenges the whole thesis, the
Oh,
whole
yeah.
monetary thesis. As it happened, um, if you look back at economic history, the US might have gone off the gold standard in the summer of 71, but the first challenge to the ability of the US to repay its debts having to do with repaying gold, because up to that point your dollars were just redeemable in gold, came in 1969 from de Gaulle, and that was the beginning of the end that led to abandoning the Bretton Woods in 71. So I think we're going to get another moment like that at some point in the not so distant future, where somebody is going to finally openly doubt, this type of handling of debt and deficits and the ability of others to repay. And I think that's going to be the beginning of the end. Of course, that is a process that might last months or even years, but I think that's going to be the beginning of the end. In any case,
Yeah.
back to the charts. Somebody asked about it, and I think it's very interesting. I wanted to show it anyhow. First of all, very briefly, crude testing, still testing, third consecutive day. This, if it's a triangle's resistance. But most importantly, natural gas might be putting here. What is this, Dale?
Looks like a cup and handle or
Yes, let's have a look at it on the 4-hour chart. Huh? What do you think?
ascending triangle, third drive. Looks like bullish as hell, actually.
It's what you initially said.
Yeah, cup and, okay.
It looks to me like a cup and handle here, exactly at 290, right? This is the
Yeah.
4-hour chart. That's why I don't have that
Okay.
zone, but let's draw it. We know that it's an important zone even in the past. So that's what I see here. So, bears reject 290. They take it down to 2.35. Bulls attack once again. Bears reject it. But this time, they have even less strength in pushing the price lower.
Right.
Guess what's going to happen next time?
Yeah, just blow through it.
I think it's extremely likely that we're just going to blow through it. Yes.
And that measured move is pretty good in the threes, huh? Okay.
Oh
High
yeah,
threes, yeah.
it is a very good breakout. I mean, look at this on the daily again, right?
Yeah.
I think 325 is the next area of resistance. I mean, I think we're really going to start moving following that, and we might do it, in a way that most people won't even expect. So natural gas coiling. I think it's very, very likely that we're going to see a very powerful move coming from there. Now,
I'll be right back, Steve.
absolutely.
Okay.
Copper has already broken through this corrective channel. I think it's about to break through the trend line resistance in the RSI as well. So I think another extension in copper towards 332, where we find this high. It was actually the end of December of 2017 when we got that high. Quite an important resistance area there. I think we can easily come to test that once we actually produce that breakout. Getting rid of slowing COVID by taking it more serious is biggest stimulus out there. Yes, that's going to be true. Although, something perversely speaking, once COVID goes away, the excuse for anomalous amounts of stimulus goes away as well. So it might be funny because getting rid of COVID is actually going to be positive for economic growth, but the stock market is not trading based on economic growth. If it was trading based on economic growth, it would be half of where it is at the moment, because economic growth is really, really bad, right? And if you even if you take into account a couple more factors for people that actually want to take into account real economic growth, meaning somewhat understating inflation, which is growth positive, because you first have to deflate the nominal number to get actual growth, and add to that the amount of debt needing to create a percentage of growth, then growth is really extremely bad, and it has been. So I think getting rid of COVID is going to be positive for the economy, probably bad for the stock market. Aussies diverging with S&P, something big will happen. So here's the Aussie, since you mentioned it. So far, the move lower isn't looking impulsive, right? Yes, it is diverging. I'm not going to disagree. I wouldn't say like it's an amazing divergence to write home about. And as I said, the move lower definitely doesn't look impulsive to me. Same thing with Kiwi. Actually, Kiwi looks even better because it's still holding within this ascending channel, and perhaps it can actually accelerate higher from there. I do think that Aussie and Kiwi have a good chance of moving higher in the time to come, mostly because I'm bearish the dollar, and I believe that commodity prices will go much higher against the dollar. So I do think that commodity currencies will end up benefiting quite a lot. But I'm not sure if they're ready to break out yet. Kiwi, as I said, looks somewhat better, but also it doesn't look that bad either. I mean, considering especially the prior move to the upside. Natural gas in the air, like a cup and handle. Oh yeah, Yeah, that what we talked about. Sorry, I didn't see your message. Yes, it does look like Apple Cap and Handle. Italy 10% increase in haircut price due to post-lockdown obligatory use of single-use disposable materials. Yeah, it makes sense. I mean, definitely increases the costs of operating your business, right? Because for every client you have to, use like masks and gloves and everything else, and then get rid of them and, do extra work to clean everything up. So it makes sense, especially given the fact that a haircut is not really expensive. 10% is, it makes sense to me. Okay, so let me see if there are any more questions. Good morning. Look at natural gas. We did that. Nifty, Bank Nifty, and USD INR. Yes.
I'm back.
So welcome back. So USD INR. Where is it hidden? Doesn't really matter. We'll type it in. Here it is. So it has broken down from this triangle. It has broken down from this pennant. That's all good stuff if you're short. On the other hand, where's the momentum here? There isn't any. So I don't know. I mean, yeah, if I had to do something, definitely short. But doesn't seem to really move fast. In any case, 72 is a very important area of support for the currency pair. Okay, so keep that in mind. Now, having to do with Nifty, since you asked about it, listen, Nifty had a corrective move lower, clearly. Not only that, it had a nice overthrow from this corrective channel. I bet a lot of people
Oh, yeah.
were caught, selling there. And now we've pushed to new highs. So, yesterday's candlestick, a bearish engulfing, a long bearish engulfing, looks quite promising for some type of a corrective move lower, but all in all, doesn't look bearish. You know what I mean? In the short term, it might due to that candle. Now, having to do with Bank Nifty's move higher definitely looks corrective. And as I've said before, don't get involved with banks. Banks have, really no chance of doing well. One way or another, they're going to lose. The traditional banking model is completely broken now. So I wouldn't be buying. I mean, literally, the only way for me to buy banks is put a gun in my head. There is no other alternative. Gold and silver, testing support once again. Here is gold. Testing support once again. Here is silver. Keep in mind, ignoring all that, there is also, that's why we've said multiple times that corrective moves are not easy to read, since day one that they begin. There is also the potential of having like a bigger corrective formation here, which is a big pennant like this.
Yeah, I like that formation.
Yes. So keep in mind, there isn't, a guarantee that we're going to see one more low in gold and silver. There is a chance that we won't. Okay. I'm not convinced yet. I'd still want to see one more low towards 1820 in the case of gold and towards 21 in the case of silver. But I wouldn't be surprised if they decide not to do that at all and just punch through and, start accelerating to the upside once again. So keep that in mind. I think that gold and silver more or less are coiling also in expectation of what's going to happen with stimulus, among other things. Okay. So Dale, we're
Mark
at the
is
top of the
here.
hour. Is Mark here? Good.
He
Okay.
is.
Okay, I'm going to
Whoops,
stick
I
around
didn't mean
until
to do
he's.
that. I'm sorry. I didn't mean to do that.
What did you
Let's
do?
see if I don't know, I clicked the wrong button. Oh, hold on.
I'll do it. Don't worry about it. I'll promote him.
Oh yeah, wrong mark. Wrong
Okay,
mark.
I'll demote him. Don't worry. Let me
Okay.
handle it.
I'm so fried by Friday. Fried Friday.
Okay, so Mark is here. I see he's unmuted. Mark, can you test your
Hi there.
mic? Oh,
How
there
you
you
Hey.
go.
doing? How are you doing this morning?
Good, buddy. Thanks
Good.
for coming back. Thanks for coming back.
No, my pleasure.
All right.
Okay, so
So,
I'll stop sharing so you can share. I also gave you the ability to share
Okay.
your camera if you wish to do so. So it's all
Okay.
yours.
let's see your
Have a-
pandemic haircut, Mark.
Have a wonderful weekend, everybody.
Thank
You
you
too,
very much.
Steve. Good work this week, Steve. Thank you. Mark, so yeah, I've been talking to people. Wow. Mark went ahead with a PowerPoint. I'm just going to shut up and let you talk, bro. Go ahead.
No, I thought this might be easier, just at least initially, because I have several different screens, and so sometimes
Okay.
if I just put a lot of things together, and I used some of these yesterday in a presentation I did, so I just wanted to discuss, some of the pros and the cons, and then we'll go from there. But yeah, truly an incredible time. Markets have been very resilient and able to ignore a lot of the ongoing pandemic, the lack of a vaccine, the election uncertainty. I mean, none of that really has mattered all that much. Recessionary economic conditions, we've only snapped back a little bit. So, I think it'd be interesting to start with a couple of different positives and talk about some of the good things that are happening, and then we'll go on to some of the negatives, if you don't mind.
Sure.
So, initially, I think it is a positive, the fact that equities remain near all-time highs, at least with regards to the indices. As we know, the broader indices are nowhere near the all-time highs, and we'll talk about that in a minute. But I think that is, the fact that we've been able to push up. Momentum is still positive on a short-term basis, looking at daily and weekly. So I think that is a good thing. We've seen a snapback and advanced decline. That's also a positive. We saw that back in the early part of this year. It was one of the few times in history where equities have had such a violent decline when advanced decline was really at new all-time highs. And so now that's managed to be surpassed. As you see on the upper part of the chart, the NYSE composite is really nowhere near all-time highs, but yet breadth has actually done quite well, particularly in the last couple of weeks. A lot of the percentages of stocks above their 20, 50, and 200 have all jumped up. So those are all good things in the short run. We saw a little bit of a drop off in technology, and that was bad. And these other sectors have mainly moved in to sort of take up the slack. So when you see strength out of financials, healthcare, industrials, discretionary, I mean, those are decent.
So
one thing I
good
would-
internals, right, bro?
It's good internals in the short run. Yeah.
Okay.
I
Yeah.
think that
Okay.
it's important to note that these indices, the ETFs that people look at these days are obviously very dominated by the big five. And so it's more important than ever, I think, to really know what you own. Watch the equal-weighted ETFs and really understand what it is that you own in these. So the NASDAQ breadth has rebounded back. You did see a little bit of divergence in January, February this year in the middle part of the chart. And right now, there's really no divergence. We've actually rallied back. So that's certainly a positive. The concerns, in my view, are the fact that, you really, even though we've seen a huge rebound in sentiment on the institutional side, which started, pretty much back in mid-May, June, the investor side really has not snapped back as much. And so, you look at just individual sentiment, and I still use AII, American Association of Individual Investors, as at least one of my tools. I use a number of different things, but typically at major peaks, you'll see these really widen out. So where they actually match, where the investors intelligence data matches the AII in extremes. And right now they're pretty much flat, which means that there's still, a lot of concern about the election, about the pandemic, about the economy. I think that we all talk to our neighbors and our friends, and people just acknowledge that it's sort of been a crappy year, and so it's tough for people to get truly that enthusiastic, I think, on the individual side. And so
Yeah, maybe that's the instead of the V recovery, the K, that institutions are, thinking about, financial conditions, and individuals are feeling what's on the ground.
So that doesn't mean that we can't sell off, of course. And I think
Yeah.
that the next couple months have a very big potential of being down. However, I think that, even on a sell-off, that we're probably going to rebound in a fashion that will get people optimistic again for a larger peak potentially next spring. And so we'll talk about that. But I think that right now, sentiment has improved. Obviously, some people would argue it's wildly optimistic and complacent. And I say, you know what, you can certainly see that by put to call ratios, but with regards to just regular sentiment, it's still pretty guarded, but we have improved. The bears, as of this week, are the lowest level we've seen since February.
So is there equity?
Yeah, the equity put to call got to like 0.41 the other day. So we only.
I'm talking about the Bears equity.
Yeah, the Bears. Yeah,
Is that the
exactly.
lowest point?
Yeah.
Okay.
Right.
All right.
But here, look at here's like the equal weighted S&P, and of course we're not even at June highs, much less all-time highs. So,
Yeah.
we've snapped back in pretty resilient fashion, but yet there's still some real issues. Technology, for one, really largely peaked out on an equal weighted basis over the summer. So we've had a couple different stabs at moving up on an absolute basis, but relative to the S&P, technology really has gradually been weakening, arguably, in the last couple months. It hasn't been as strong. The semiconductors are a different boat. I mean, they've obviously been pretty robust. It's been largely tech hardware and software, which has been Apple, and we'll talk about that in a minute. But this is the equity put to call. You see us down at the lowest levels that we saw just since June and also September. So that's obviously typically a warning sign when bells should go off. This is just from Holbert, and you see that at least they believe that market timers right now are very, very bullish. And so, historically, that's been a source of concern. Defensive trading has started to pick up. So for me, that is also something to pay attention to. You see the REITs, you see staples. It's really been utilities, though, in the last couple of weeks. Even with rates having gone up, utilities have done very well. And so this happened also back the early part of this year in January, and was certainly one part of the bearish argument for me outside of everything else I look at. So it is important. The dollar, I think, is really key, because you did see, you've seen some pretty good exact, if not negative, correlation between the dollar and the U.S. stock market. We bottomed in the dollar on September the 1st. That's when stocks peaked.
Right.
We peaked in the dollar on September 24th. That's when stocks bottomed. Now we're arguably trying to make a little bit of a bottoming formation. And, if this can start to show some strength in the U.S. dollar and breaking this trend line, my thinking is we are going to see that final move to new lows in gold and silver that everybody's been mentioning, that Steve talked about. And I think that, the Elliott charts largely would support the notion that, things like Aussie should start to fall, and the pattern to me, wave-wise, looks like we have another move to the downside. So being that that's an excellent, seeing some very high correlation over time, positive, between Aussie dollar and gold and even commodities, that we could be in for a tough month, at least with regards to what happens with the metals. And some of that's going to come from rates, real rates moving up. If yields and the dollar move up in unison, that's going to be really tough for the metals. Silver started to roll over, and I think that under 23 is pretty much a straight shot down to 20. So that's interesting.
Nice.
The cycles that I look at, I put together just based on my membership for the the study of cycle. This is the foundation of the study of cycles, and they have a couple of really interesting tools. And so I went back over 40 years and put together the 5 most actionable cycles that are the highest rated based on Bartel score and strength. And they all showed peaks in early 18, peaks in the fall of 18, and a very severe decline. Of course, the amplitude, it's not as exact as what this pink line might show, but it is a pretty steep fall off. You did peak here about a month prior to when stocks peaked this past winter.